before we get into the video, guys, if you want to help us get to our goal of 3K, make sure you hit that sub button, hit that like button. If you want to be notified when we upload fresh videos, hit that notification bell. And of course, drop us a comment down below to let us know if we've helped you. If you are looking to join our Discord community, link is down below. I hope you all enjoy the video.
In this session, we are going to be covering the trader mindset and the reasons behind the inconsistency in most traders, along with the understanding and very linear viewpoint that we should have on the market. Because what we always forget as new traders is that there is always another opportunity to trade. There is always going to be a deliverance of price, which is going to be systematic, as many of you know. It's never going to just all of a sudden change and never come back to the original flow. There's always going to be that consistent flow in orders. There's going to be consistent delivery of setups. The difference between you and the 90% of people that lose is understanding when those setups become available to you and how you begin to capitalize on them. So the first thing that we're going to look at, okay, is this very clear chart here on Euro. Now, you can see that I have a very clear target here, and I actually posted this yesterday when price was down here prior to this green arrow. And I said, this is my long-term target. We're very clearly bullish on Euro, but we want to see this high taken, right? So think about that premise as a whole, what I just said there. I said we are very clearly bullish. We want to see this high taken. Overall, we understand that price is moving up. Seems pretty simple, right? There's not really much to that. But what's the missing element that we have from our understanding of price direction and then our understanding of trade setups? What is the difference between the two? We understand that price will consistently deliver, whether it be in an uptrend or downtrend, either to new highs or new lows, but it's the setup and entry element that is missing from that understanding. Now, this is where you have many issues and many holes appear in setups from newer traders and even experienced traders. I've even fallen victim to this during my professional career, but the difference between me falling victim to it and, for example, when I was consistently becoming a victim of this is the recognition, and the recognition of being able to say, well, I understand what I have done here. I understand where I've gone wrong, and then consistently avoiding it prior to it happening again. When you have a new trader, they will recognize it subconsciously, and they'll recognize it in their account balance and in their overall consistency, but they don't adjust and change. Now, I want you to look at this market that we have here. Giving the understanding that we actually have of this chart and this pair, we know that price is delivering bullish, and we can consistently see the way that price will play back from an impulsive shift, pull back, and continue to deliver bullish. Again, pull back, deliver bullish, pull back, deliver bullish, right? We clearly see this is bullish. When we have a very clean and concise trading bias like this one, we can begin to look for setups, of course, right? But the key thing that most people forget, and I can guarantee that many of the people that are watching this live and many of the people that are going to watch this on record on YouTube have fallen victim to this as well. Now, what is the main issue that we have with any trend is knowing where to get in, right? Do we get in here? Is this the end of the pullback? Do we get in here? Is it going to go up from here? Do we get in at this spike because it swept liquidity across the lows? Do we get in after this big shift down? Do we sell away into this area? What are we looking to do? Now, I want you guys to throw your minds back to the session that I posted on YouTube I think it was Saturday. Regardless of when it is, the most recent video we posted on YouTube. What is the main point inside of that video? The main point is the deliverance of price is always going to consistently take you higher if you are in an uptrend, but it is not always going to consistently deliver back down to lows for you to buy it, right? Now think about that. It's always going to deliver higher, but it's not always going to come back down to areas for you to buy it. Now, that sentence in itself is the way that 90% of people will look at the market, but without the understanding that price won't always pull back. But what we really need to look at and what we really need to think about is price does not have to pull back for you to get involved with it. Now, this does not mean if you're in a bullish trend, just buy it because it's going to go above. Yes, eventually it will, but you'll probably suffer some severe drawdown prior to that. So how do we eliminate the mindset of, I have to be in a trade, I have to be in a trade, I need to take a trade, oh, it's Monday, I need to get profits, I'm doing a prop firm, I need to do it in 2 trades, I need to. You don't need to do anything. What you need to do is wait for the deliverance of price. Now, as a trader, you will already know, if you have come even close to being semi-proficient as a trader, you will understand that trade setups do not come every day, and that they do not deliver themselves directly to your plate with a knife and fork next to them ready for you to eat them. That's not how it works. But many people that approach the market believe this is the way the market works. They see a high, they say, well, next we must see a low. They see a low and they say, well, next we must see a high. When we have price delivering in a very clear direction like this, we need to be patient. Now, we have 2 different ways to approach any market. We have a precision way of approaching a market, and we have a very, how would I say, loose approach to approaching the market. Now, the ways that we would obviously look to do this is a very loose approach to the market would be, for example, finding a high and low, like so, finding the low, finding the high, and saying to yourself, well, if I see price pull back to a given area, so for example, let's say this level here, if I see it pull back to here, I'm going to put my stop below this low and I'm going to buy to the high. So you guys can already see that the risk reward on that is pretty minimal, but using the right understanding in price, you will consistently hit TPs. Yes, you will go into drawdown, and this is not necessarily a way that you're going to be able to pass a funding challenge or get, how would I say, large amounts of profit over a small period of time. No. And then we have the precision way, right? Which would be wait for larger time frame trend to align, and then locate a very fine area, for example here, with your stop loss below a smaller time frame low, and then you start aiming for your high or even nearer highs, you know, wherever it may be, which is going to deliver to you much higher returns. But what is the difference between these 2 setups? The difference between these 2 setups is the understanding of precision and the understanding of how consistently these setups are going to appear. This setup like this, right, with a 1-to-1 risk reward or a 1-to-1.3, wherever it may be, even if it's a 1-to-5, it is always going to be there. Why? Because you can have any kind of market conditions inside of your low and high. You can have any kind of market conditions inside of here, and you know by probability it is going to go higher to the next high. Why? Because we understand that price is consistently delivering higher, therefore the probability for us and the most likely scenario is for price to continue delivering higher. But this is not what people want. People do not want these kind of setups. Why is it that people don't want these kind of setups? Because who wants to risk 1% to gain 1.35% to just take a loss on your next one and be 0.35% up overall on your account? You don't want that, right? You want to be collecting large amounts and then holding them with a nice buffer. So if you do, for example, find another setup like this and it takes you out, you're still up 6% or you're still up 7%. That's what people want. They don't want these consistent setups. So if you want this and not this, you have to understand what the difference between these two are. Now, what is the difference between these two? One of the main differences is, of course, return. Now, return as a whole is something that you need to really, really think about, because there are two options for you in the market. And personally, these are the only two options that are available. There may be, slight different variations or, slightly different scenarios. But these are the two scenarios that you have. You have consistent, everyday collection of very small percentage gains, but more probability that your percentage is going to be collected. Or you have a less consistent delivery of high returns, which is going to provide you much more probability that you are going to remain in profit. But the only difference is these are here every single day. These are not. Now, the difference between understanding that people want the consistency of a trade setup like this, but they want the returns of a trade setup like this, is the key element that will destroy many, many traders, whether you are a brand new trader, whether you're a seasoned veteran, whether you're a funded trader, whether you're retail, whatever it may be. These setups will deliver consistently, and you will most of the time have a much higher hit rate, but a much lower profit margin. These trades are less probable to play out every time you trade them, but they will deliver to you a consistently higher increase with your account. The account curve will be much more drastic with these trades. But taking those elements out and thinking about it outside of entering a trade, coming back to the real thing that matters, which is our direction of price and the overall structural understanding of price. Why is it that with a very clear bias like this, people are still trying to sell at this high, sell at this high, sell away from this high? Oh, I'm going to buy from this low here, and I'm going to aim for this high, or I'm going to do all of this kind of stuff, right? Why is it that people do that? Because they're not allowing price to displace in the direction they want it to go in and deliver the setups that they want to catch. It takes time for these trades to come around. Now, for anybody that has been in this group for a long time, and anybody that has followed the way that I trade and the way that many in my community do trade, you'll understand that some weeks there are very small amounts of setups. Yes, there may be setups delivered in price. And yes, there may be very, very easy trades to spot on a 1 minute time frame or a 5 minute time frame or whatever time frame it may be. But the thing that separates consistency of long term with short term profit gains is the understanding that the market is delivering above highs, and that only every so often is it going to give you those trades that you are going to be able to take and follow the overall flow. Now take a look at this market as a whole. Okay? Take a look at this market and think to yourself, where would we want to trade this? If we're looking for high risk reward trades, where would we want to trade this from? We want to be trading it from the lows, yeah, or the highs. But before we start getting too excited, if we are looking to trade from the highs, you're already going against the overall flow in market, therefore reducing the already lesser probable trades. So in this scenario, in this case, we would not want to trade from highs, we would want to target highs, right? But it does not mean that if you're a smaller time frame 1 minute scalper that you can't use pullbacks to take sell positions. The only thing is you will have to have short-term targets. You have to obviously secure your position a lot quicker. All of those very key points, okay? Now, if we are looking to trade it, we want to be trading it from the lows, okay? Now think about this. Let us say we're only looking for 1 hour setups, right? We're only looking for 1 hour setups, and we only want to trade them from the true lows in price. Don't worry about the setup criteria for this right now. Think about more of the principle of what I'm showing you here. So, if we're only trading from lows and we're trading on the hourly time frame, look at the time between these two lows. That's 7 days, right? Which means regardless how hard you try to force an entry in the market, no matter how badly you want it, you are only going to have 2 setups delivered to you across 7 days. Now think about that. Cast your mind to your entries over the last week or 2 weeks or last month. If you're striving for perfection and trying to catch big moves, like you're trying to catch these impulsive continuations to the upside, you know, like 170 points, really nice, 2 days of clear, solid pushes up to the upside, we have to take the idea out of our minds that we are going to enter the market and trade every single day, because it is simply not applicable. Now this is again an example of trading the 1 hour highs and lows if you are looking to target highs, knowing that price is going to inevitably deliver higher. So the creation of a true low is where price is going to deliver the best trades from. We also have to take into consideration, what is the probability of you catching these lows consistently? What is the probability? So let's just say it's a 50-50 chance that you're going to consistently catch these trades, right? That means automatically we can get rid of one of these, which then brings your trade setups down to 1 trade per 7 days. Already you can probably see where people were going wrong, because what is happening is people are looking at this and they have really wide eyes, and they're looking at this like they're looking at them like this guy over here that we're going to find in a second, wherever he is. Okay, not like that. We're going to find some eyeballs here. We need to emphasize this point. So we're going to be consistently hunting this, right? And I don't know where the eyes are, so we're not going to find any eyes. We'll go with this. All right, we're going to be consistently looking for this, staring at it, saying, I want this setup to be delivered. This guy on YouTube, he took this setup every day for a week. I want it. Where is it? Right? So the whole time, this low, let's say this low's already been delivered and you're waiting for this low. The whole time this is happening, every single short-term low that's created, what are you doing? Whoa, is this the low? Is this the low? Is this where we're going to trade from? Okay, this is the low. I'm buying it. Okay, I'm not happy with the short-term targets that I got here. I want the high to be taken. You get taken out. Okay, well this is the low. Okay, well I want, I'm not happy with this high as my target. I want this high. You get taken out. Okay, well this is probably not the low, because we could still come down a bit lower, and then price leaves without you, and it becomes an emotional trade and an emotional system, and all of a sudden every single high is now the new high that price is going to retrace to deliver your next trade. And what you've already noticed is, instead of just simply looking at price and saying, well, unless price delivers to, let's say, this order block here, this order block here, or this order block here, unless it delivers to one of these points, we're not even going to sniff at trying to buy this market. Yeah? That already has taken away this eager eye mentality of, I need to catch 1 to 10, I need to catch 1 to 7, I'm going to catch this today, I'm going to do this today, you don't tell the market what you're going to do. It tells you what it's going to do, and you react accordingly. Now I can promise you now There are going to be many people and many traders out there that do take massive trades consistently, every single day of the week, to be in fact. But they will always take consistent losses to match that. The only difference is they have trained themselves to a level that taking a loss does not affect them, and they know that even if they take 5 losses in a row, they only need to catch one of their setups to alleviate that and become X amount of profit again ahead of where they were. Okay? So, what is the difference between you, again, not directed to anybody in particular, you, a non-profitable trader that is looking for a setup every single day, but you desire greatness and you desire the finest tuned zero drawdown sniper entry trade of the year every time you get in, and somebody that consistently enters when their rules are met and price is delivering in the direction they want it to deliver to, and understands that if they take a loss, the next one could be a loss, the next one could be a loss, the next one could be a loss, but they understand their system and the probability of their system, is the difference between having the wrong trading mindset on a daily basis and the correct trading mindset. Now, the trading mindset as a whole is not going to come easily. It's not something that you're just going to be able to wake up one day and become, the ultimate trader on earth. But over consistency and time of applying the same things to the chart, you will eventually begin to see exactly what you're looking at here, which is a consistent taking of highs. Yes, there is dips, but there's consistency in the way that your account will be delivered. Now, what I need you to really think about is this as a whole, and think about it as your account curve. There is going to be dips and there's going to be drops. This is inevitable, regardless of what system you're trading. No matter what anybody says to you, there will always be dips in an account. Now, you may get lucky and you may have price just deliver straight into your setups and you get 3 trades in a row and you pass, let's say, a funded account within 3 trades, 2 trades, 1 trade, whatever it may be, and that curve just looks like a straight arrow to the upside. Amazing. But it's not consistently going to work like that. So understanding that the market and your account are going to synchronize and work in the same way is going to be the difference between being profitable and patient and being non-profitable and not being patient. The main element to it is understanding if this is your account, and let's say we took a 1% loss from a trade here, it dropped us down. We took a partial on a really nice entry, but it went break even. Then we took another trade and we took a loss here and it pushed us down below this level. We took another partial, it brought us back up. We took another loss or 2 losses, it took us back down. We understand if we're taking these losses that the probability is that our account is going to regain that curve and go higher. Why? Because we know that we're consistently delivering to ourselves the same rules, the same probability, and we know that just because we've taken a dip in the market, just because the market's not delivering to the areas we want to buy from, that when we have our trades delivered, we have our entries met, the probability is that price is going to consistently go higher, the same as our accounts. So please, when you take your first look at the charts for the day, whether it be the daily, whether it be the 5-minute, whatever time frame it may be, establish your trend for that given day or that given week, that given year, whatever time frame you're working on, and follow that flow. If price consistently delivers to the downside, it does not have to bring back to your area and then sell away again. It doesn't have to do that. The probability is it's going to move without you. This is why sometimes confirmation entries don't work, because price will deliver to an area and then move away, and it won't pull back. It will just keep dropping and dropping and dropping and dropping. So if we do have an opportunity where price pulls back and it delivers to an area, so for example like this, let's say it delivers down to here, right? And we get the setup we want. We know by default the probability for this becomes much higher. But as stated at the beginning, the difference between somebody that has a consistent system in the market and somebody that has a consistent way of losing in the market is the person that does not wait, that does not comprehend this drop excuse me, this drop being part of an overall movement. At this point, everybody's selling. All you have to do is go and look at the retail sentiment, and that will give you a very, very good understanding of the overall perspective of how losing traders look at the market. Yes, you will have drops. Yes, you will have rises. But at the end of the day, if we're moving up, we trade with that flow. So if price delivers to the areas you want to buy from, then you can look to buy. If it reacts the way you want it to react to that area, then you can look to take it. If it consistently goes higher, 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 you're not going to be able to take a trade. But the time it does pull back to a POI that you've been looking at, for example, and delivers that impulsive shift to the upside, pulls back to your POI, you already know your stop loss below here, your TP being here, you're a lot more probable to see profit out of this than you are to see loss. Take out of your mind the fact, well, oh, we're at a high and we could pull all the way back down to here. Well, we probably won't because we're in an upwards trend. So stop thinking of scenarios and actively trade what price is showing you. Applying the rule set of trend is always going to deliver in one direction until it changes. Applying the rule set that not every day I come to the charts I can trade. Applying the rule set that when my setups are delivered, whether I lose or win, I understand the probability of my account becoming profitable is much higher than it is going overall down, is going to deliver to you consistent results across every single trading system that you use. Now, please do not take this super literally and say, well, it's clearly trending up, so every buy setup that's delivered, I'm going to be able to make profits on it. As I stated in the beginning, that's not the case. We understand that precision trading comes with risk. Trading with a precise system like so, and having, for example, swing to swing trading, really nice risk rewards, like 4.8, really nice. Okay, we'd prefer for it to be a bit higher, but so be it. Means you're going to have missed entries. It means you're going to have days where you don't have setups. It means you're going to have pairs that you can't trade for a week because they're consolidating. It means that you're going to have all of these things mixed in. But the thing that doesn't change is our understanding that when price does deliver, we are going to trade it. And when it does hit our TP, we are going to accept that as part of our system. When it does hit stop loss, we're going to accept that as part of our system. And the whole way through your progress in your journey, the one thing you will notice, unless you're scalping every single move in the market, which personally I don't recommend, but you can trade whatever you want, there's one thing you're going to notice. If you open up a timeline of your trading career, whether it be a week, whether it be a month, whether it be 10 years, the one thing you will notice, and I can guarantee you this, in the beginning you'll be taking 10 trades a week. By the end of your career you'll be taking 3 trades a week, 2 trades a week. Because it's truly impossible to expect an inefficient and efficient market to deliver consistently to the areas that you want to. So when you come to the market, read it for what it is, accept it for what it's showing you, and unless it delivers to where you would like to buy or sell from, let it continue to flow in the direction it wants to flow in. If a setup's delivered in that direction, trade the setup. Always follow price. Don't follow your heart. Don't follow your desire to buy it or sell it. Follow what price is showing you. So I hope that that has helped all of you take a little bit of my mindset and hold on to it, put it into your trading journal, put it wherever it is you want it to go, and apply it to the way that you analyze the market. And I can promise you now that you will start to see a drastic improvement. Please stop trying to trade every single move in the market and trying to be part of every single shift that comes. Just allow price to deliver to the points that you want to trade it from. And it's at that time that you can actually say to yourself, I understand what I'm doing and where I want to be, meaning that I can now confidently enter the market knowing that probability is on my side. So if you have enjoyed this video, guys, make sure that you hit that like button and drop us a comment down below. Of course, if you want to be a part of our Discord community, the link is down below, so I'd appreciate that if you all join and jump in and say hello. But until the next one, guys, have an amazing trading week, and I'll catch you all very, very soon.